Tesla stock failed to hold the $400 level, and now the next critical test is simple. Can Tesla hold around $380? If it can, this may become a short-term support zone. But if it breaks below the recent low near $368, the chart could open the door to a deeper correction. Good morning, everyone. This is Ken. In the previous video, we talked about one key question. Can Tesla stock defend $400? At that time, $400 was the psychological line investors were watching. If Tesla could hold that level, the next step would have been a recovery toward the 50-day moving average around $402 to $405, and then another attempt at the $413 to $418 zone. But the latest chart has changed the situation. Tesla did not just slightly dip below $400. It clearly broke below it and closed in the $379 area. So, in my view, the old short-term bullish setup has moved backward. Right now, this is not yet about breaking above $416 or $418. The first question is much more basic. Can Tesla stop falling near $380? Let's start with the daily chart. Tesla fell as low as the $368 area, then recovered and closed near $379. That means buyers did appear around the lower 370s. But I would not call this a strong reversal yet. It looks more like the stock is trying to stabilize after losing an important level. So the current battle zone is roughly the high $370 to around $380. If Tesla can hold this area, a short-term rebound becomes possible. But if the stock breaks below $368 again, then the next downside levels become important. In that case, I would watch around $360 first. And if selling pressure accelerates, the $340 to $350 area could come into view. Now, let's look at the 4-hour chart. On the 4-hour chart, the structure still does not show clear buyer control. Yes, Tesla bounced from the lows, but the bounce does not look powerful enough yet to say that the market has fully changed direction. For me, the key is whether Tesla can hold several 4-hour candles around $380. If it can stay there, buyers may be building a short-term base. But if Tesla falls back into the low 370s and then breaks the $368 area again, that would be a warning signal. A bottom is not just one green candle. A real bottom needs repeated defense. Next, let's talk about the moving averages. This is the part that makes the chart look weak. Tesla is currently trading below all three major moving averages. The 20-day moving average is around $401.55. The 50-day moving average is around $404.77. And the 200-day moving average is around $417.96. Meanwhile, Tesla is trading around the $379 area, so the stock is below the 20-day, below the 50-day, and below the 200-day. That means even if Tesla rebounds from here, the first resistance zone is likely to be around $400 to $405. This is important. A bounce back to $400 does not automatically mean the chart has turned bullish again. Tesla needs to reclaim that area and stay above it. If it cannot recover $400 to $405, then the rebound may be just a weak bounce inside a downtrend. Now let's check the RSI. The 4-hour RSI is around 39.82. The daily RSI is around 41.20. Both are below 50, so momentum is still weak. But here is the tricky part. RSI is not extremely oversold. It is not deeply below 30. If RSI were near 30 or lower, we could say the stock is approaching a more aggressive short-term oversold zone. But around 40, Tesla is weak, yet not washed out. That means I would be careful about saying this must be the bottom. For now, price action matters more than the RSI alone. Tesla needs to prove that it can hold $380 and avoid breaking below $368 again. Next, let's look at volume delta and trading volume. The recent 4-hour volume delta is still negative. That means selling pressure has not disappeared. There are still visible red bars, and buyers have not clearly taken control yet. On the daily chart, the volume also does not look like a major bullish reversal. It looks more like the stock fell hard, then recovered slightly. So, from here, the question is very simple. Will buyers keep stepping in around the high $370? Or will sellers push Tesla back below the recent low? That is what I am watching closely. Now, let's zoom out to the weekly chart. Tesla is down more than 5% on the week, and losing $400 is weak even from a weekly perspective. But I want to separate two things. Short-term chart weakness and long-term business conviction are not the same thing. Long-term, I still believe Tesla is becoming much more than an EV company. The bigger story is autonomy, AI, energy, robotics, and platform value. But short-term, the chart is under pressure. So, as a Tesla investor, I think we need to hold both ideas at the same time. Long-term conviction is important, but short-term price levels still matter because they help us avoid emotional decisions. So let's organize the key levels. The first level is $380. This is the most important short-term line right now. If Tesla holds around $380, a rebound becomes possible. The second level is $368 to $370. This is the recent low zone. If Tesla breaks this area again, downside risk increases. The third level is $400 to $405. This is the first major resistance zone because the 20-day and 50-day moving averages are there. And the fourth level is $417 to $418. This is near the 200-day moving average. Until Tesla can reclaim this area, it is difficult to say the chart has fully turned strong again. From here, I see three possible scenarios. Scenario 1 is the bullish recovery. Tesla holds $380, recovers $400, and then breaks above $405. If that happens, the drop below $400 may have been a temporary shakeout. Then, Tesla could retest the $413 to $418 zone. Scenario 2 is neutral consolidation. Tesla moves sideways between the 370s and 390s. This would mean buyers and sellers are still fighting and the market is waiting for the next clear signal. This kind of sideways movement can feel boring, but it often becomes the preparation phase for the next big move. Scenario 3 is the bearish breakdown. Tesla clearly breaks below $368. In that case, I would watch $360 first and then the $340 to $350 area if selling pressure continues. This would mean Tesla lost $400 and then made another lower low. That would require caution. So my conclusion today is this. Tesla's long-term story is not broken, but the short-term chart has clearly weakened. The first test is no longer $416. The first test is $380. If Tesla holds it, the stock may attempt a rebound toward $400 to $405, but if Tesla loses $368, the correction may not be finished yet. Which scenario do you think is most likely? a rebound from $380, sideways consolidation, or a breakdown below $368? Let me know in the comments. If this video helped you understand Tesla's current setup, please hit the like button and subscribe. I cover Tesla every day from the perspective of both Tesla owners and long-term investors. Thanks for watching, and let's keep enjoying life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.